Do we, as people who are thinking about home ownership, need to think about that differently as well? Instead of trying to get out of our communities, should we be investing back into our communities, specifically through home ownership?
So it's a complicated question.
So you think the Democratic Party cares about Black people? Believe it or not, Rex, I think that tweet is part of the problem. Do you feel like we could have addressed this homeless issue much sooner? You have to speak a word, make it a good one.
Okay, let's go.
Welcome back to The Word once again. I'm Jackie Ray. I'm excited about this topic because we talk a lot on this show about generational wealth and what that means specifically for the Black community. I have a lot of questions, so if you are thinking about home ownership, I'm hoping that we're aligned and maybe I can get some of those questions answered for you right now because Angelo Dickens is joining me right now. You've probably seen him around. I've seen you more times than I've actually talk to you.
Really?
Like
Okay.
I've seen you around. I'm like, oh, you are always out and
Oh,
about. You are a realtor here in Long Beach. Fun fact, you guys, though, when I found out he was a realtor, I was like, let me go to his portfolio. And I
on
went to his
LinkedIn.
portfolio on LinkedIn and I was like, let me get out of his portfolio because I can't afford anything on here.
You silly.
But then when I talked to you, you said, don't worry about that. You've
Yeah.
actually helped somebody get into a mobile home.
I sold a mobile home. Somebody's asking me to help them rent out a room. Like
You've done
I
everything.
try to do everything. I try not to turn anybody down.
Did they know they wanted the mobile home, or did you kind of look at their situation and say, okay, this is something that's in your price range?
So how I actually met that person, it was a seller. I
Mm.
met her um at her property in Anaheim, and she was selling it. I was trying to bring her like a investor offer, and I didn't get the offer accepted. But we stayed in contact with each other, and I think she ended up selling the house and taking the money and buying a mobile home. But some years later, she reached out to me to help her sell it,
Mm.
and I didn't know what I was doing, but I just like, yeah, I'll help you. So I learned.
Yeah, absolutely. I'm gonna circle back to that mobile home but I
Yeah,
want to get into some
it's not
questions
as
that
easy as you think.
really.
No, to sell them, I'm sure it is to buy.
Oh,
Yeah.
okay. Yeah, that makes sense. All right, so let's get into some of these questions because, like I said, we do talk a lot about generational
Okay.
wealth. When for Black people specifically, when we think about generational wealth, do we have to think about home ownership, or are they separate? You can have generational wealth without owning property.
So I think the whole premise of generational wealth is just being able to pass off like assets
Mhm.
or money, kind of set up the next generation. So we're already at like a disadvantage because for a long time we were excluded from home ownership. And the reason why I talk a lot about generational wealth through the lens of home ownership is because that's what makes up most people's wealth base. If you look at it like as a pie chart,
Right.
that's usually the biggest sector of their wealth. So that's why I say that. And that's pretty much this the consensus. But as you start getting into the top 10% of wealth, their home ownership pie chart is smaller, and now it becomes because business, right? Business
Mhm.
sector, they're making money through different streams of income, and a lot of people that are wealthy have businesses, so that usually is most of their wealth. But
Mm.
for like the common person, is the biggest thing they're ever gonna buy is a home,
Right.
and if you're able to buy a home, live there for a long time, and leave that wealth to your family or sell it years later, it's a transfer of wealth, and that's
Mhm.
usually where we got affected was through policy like redlining and not being able to buy in certain neighborhoods because certain neighborhoods appreciate it and value more than others.
Mhm.
So if you compare, for example, a white family to a black family that live in the same city but in different parts, the white family might have 3 or 4 times the wealth in their house than that black family,
Mhm.
just through government policies that not that are no longer around anymore, but it had an impact, generations, after.
We've been covering the death of 12-year-old Eric Gregory Brown the
Hmm.
third, and when they did the protest in front of City Hall, all of the community activists were talking about programs, programs, programs. Programs need to be in these
Yeah.
communities, specifically Black communities, underserved communities. Do we, as people who are thinking about home ownership, need to think about that differently as well? Instead of trying to get out of our communities, should we be investing back into our communities, specifically through home ownership?
So it's a complicated question because, like, you can go back to the 60s, right? You had where we were starting to be allowed to buy, and be able to move into different neighborhoods. We created white flight.
Right.
by our presence, right? So those white families or Jewish families or Italian families, they moved out of the city centers, the urban areas, and started moving out to suburbs. And we took over, and we made it our own, and eventually that went to decay because what white flight did, it took investment out of those areas and
With like
reinvestment.
businesses.
Businesses
Mm-hmm.
businesses started to leave. Think about like in Cleveland where I grew up. I think about Cleveland as a really good example because back in the 70s and 80s, that's usually when you had your black excellence. That was kind of like our
Mm-hmm.
golden era, right?
It was.
We were able to buy homes, raise, families, be in a pretty decent neighborhood. But, in those Rust Belt cities like Pittsburgh, Cleveland, areas like that, those industry jobs, they started leaving. And so what happened is the jobs dried up and the income dried up. They became ghettos and they became
Mm-hmm.
run down and they became, hoods. And a lot of Cleveland is still like that to this day. But what ended up happening years later, as the affordability of homes got hard, you saw families that couldn't afford in certain areas, the suburbs or outside of the city centers, they actually started moving back into the city. And
Mm-hmm.
here, I haven't seen it so much in Long Beach yet because we are pretty diverse, but in LA, you'll see it really big in like the Adams district.
You definitely do, yeah.
Those people that can't afford to buy in like Culver City or Santa Monica, even Venice now is expensive. They're starting to move back into the black communities. So I would say that I think everyone wants to do better, right? So
Mm-hmm.
like there's this thing in, hip hop, like, oh, I want to get my mama out the hood. I want to get out the hood.
Right.
You want to take yourself out the environment that you came up in and try to do better. So I think that's a natural inclination to want to lift yourself up, out of a situation. There's nothing wrong with that. But to a certain extent, we do need to have some investment in our communities, whether that's through us, as a black community, or through the city. There
Mm-hmm.
needs to be development because when you don't, that's why you end up getting bad areas. There's no jobs, there's no opportunities, no investment.
Mm-hmm.
So now you're seeing a lot of people move to like the downtown areas, and you could walk around Long Beach now and see a lot of construction going on. They're reinvesting back into the city centers. So
It's interesting that you mentioned the Adams district. I used to go to church, West Angeles, Church of
mhm,
God in Christ, and that's the hood.
yeah,
And then one day a Starbucks went up, and I said, "Oh damn,"
yeah.
because that's like your first
On
sign
Crenshaw,
that
right? Yeah,
yeah,
I
that's
remember
yeah,
I was living in that part of LA when I first moved out here
yeah.
when that Starbucks came.
And it's like that's your first sign that gentrification is
Yeah,
coming. And now, if you drive down, specifically Crenshaw, even or La Brea,
yeah,
because they kind of sandwich that in, you'll see, run down, and then somebody clearly bought a plot,
yeah.
leveled it, and now it's like this, some of them look like old school Miami Vice
Mhm.
houses, but they're very, very nice. And that always is troubling to me because it's like you said, white flight happened,
Yeah,
but now because of inflation, they can't afford it. So now they're moving back in. But when they move back in, they never consider the community.
yeah.
They just consider pushing people out. So that's why I always wonder, like, if do as part of when thinking about generational wealth, do those of us who can afford it have a responsibility to invest in our communities because we know no one else
I think
will?
there's not an obligation,
Okay.
but some would consider a responsibility. Like if
Mm-hmm.
you're of a certain status and you have the means and you have the pool, I think you should take some accountability and responsibility to try to reinvest back in areas where you came from or where you see your resources could be more utilized better. I
Mm-hmm.
mean, anybody can go start up a restaurant over on, Naples or
Right.
put a laundry mat over there, dry cleaners. But how about putting one in an area that really needs it? It's funny. Sometimes I go over to the Naples area and I see all these food places, right?
Mm-hmm.
I see Gelson's, I see Whole Foods. They're right across the street from each other.
Right.
But in North Long Beach, there's no grocery store. So, it'd be nice to see somebody reinvest a grocery store back into a community like that, or a bank, or
Mm-hmm.
a coffee shop. So, I mean, I think we're making some strides, but definitely a lot of room for opportunity.
So I used to, fun fact, I freelanced a long time as a journalist and I
Mm,
had to like make money. So a lot of that was in, some sort of management, property management, but also HOA
yeah.
management. And doing HOA management, I said, I will never move into a community that is HOA
Mhm.
because y'all think regular politics is bad. Y'all wait till some of these people start running for HOA president. They be losing their mind. But sometimes with the dues and you might have to get that special
Mhm.
assessment. For somebody who is just starting out and looking for a home, should they consider which is better, not moving into an HOA community or an HOA community?
So usually when real estate, I always try to come from the perspective of like experience. And there's times that I try to give people advice on some things I haven't personally done, but I know it's the best way of doing it.
Mm-hmm.
So a lot of times when I try to connect with people, it's from a personal level. So I started off by being a homeowner in a townhome in
Okay.
Signal Hill.
Mm-hmm.
And it probably wasn't my first choice. I wanted to buy a single family, but that was just kind of like where my budget kind of took me. But I bought a townhome in a nice area.
Mm-hmm.
So that was kind of like my catch 22, right? I didn't get what I really wanted, but at least I bought where was a nice opportunity.
Right.
So me and my wife, we bought that 3 months after we got married, and we stayed there for like 4 years. But what it did, instead of just kept renting and not buying, we accumulated equity. And
Mm-hmm.
so we had a son, and he was about 1.5 years old when we decided to sell our townhome, and we bought a single family in Orange County. And it's kind of like it was a step up, right? You gotta look at real estate like a ladder, just start, even if you want to rent, go buy somewhere out of state where it's cheap,
Right.
buy a multifamily or buy a rental property or something, and still live in the area where you want to be at. So I don't think there's any right or wrong answer to like
Mm.
investing in real estate, just buy a condo, buy a townhouse, buy a multifamily because a lot of people don't notice 1 to 4 units, you still have to put the same down payment down. You can still get the
Oh, even
same.
up to 4
Yep.
units? Oh,
Yeah,
wow.
you could. So like if you were using an FHA loan, if whether I bought a single family house or I bought 4 units, it still only requires I put 3.5% down,
Hmm.
and the criteria is the same. It's still the same loan. It's no different. What's kind of cool about the multifamily situation is actually the other rental incomes that come with the property, it actually allows you to qualify for the property even more. So instead of me just using, let's say if me and my wife were trying to get a house, the lender would just look at our debt and our income. But if we're looking at a multifamily, they're also considering the other incomes that that property generates. So it
Oh,
actually may
okay.
help you qualify for more.
Hmm.
So, a lot of people think, oh, let me buy a house. Maybe start off in a duplex.
That's what I
So
wanted.
yeah,
I
I
wanted a duplex or hopefully a fourplex
mhm,
would be like ideal for me. There was a point, and this might be good. I know this happens to a lot of people now because especially out here in, Los Angeles
yeah,
County, people got different kinds of jobs,
yeah,
So at the time, I had my freelance work. My freelance work was paying me the most money.
mhm,
But then I had a job as a part-time property manager that was decent money, but it wasn't paying me the most.
mhm,
And I couldn't, and that time I had tried to buy a duplex in Watts
okay,
because I saw the gentrification coming and I was like, let me get in on
yeah,
this. And as far as my credit and stuff, I was fine,
mhm,
but I couldn't qualify income wise because my freelance work was all 1099.
okay.
And they said I need W-2 that,
So that is a misconception. Like there
okay,
are programs, and maybe not every lender does it, but there's lenders that cater towards entrepreneurs or
okay.
self-employed people. And they have their different, process of how they qualify them, but that is definitely not an obstacle towards being
It
able to
was for
buy.
me.
Maybe at the time or that particular lender.
Yeah,
Yeah.
I think it was probably the lender. I was going with a specific,
Okay.
person that was recommended to me because and I had such a fear
Hmm.
going into it because I didn't feel like I knew enough.
Yeah.
So the person that was recommended to me, I kinda latched onto them for dear
Okay.
life and was like, "Wherever you tell me to
Yeah.
go is where
Yeah.
I'm gonna go," So and I think that might be a setback for a lot of people. Is it a matter of making sure you do enough research so you know that these options are out there? Or can you find somebody to guide you through this process and let you know, hey, this isn't a hurdle, this is a different option?
I think it's just really just being informed and
Mhm.
educated and being exposed to the information. Like one of my regrets, and I always tell my wife this year, this years later, I always wish we would have bought a duplex.
Mhm.
I just always felt like when we were ready for that single family, we wouldn't have had to sell. We could have, like, if we were in a duplex, we could have rented it out and had two incomes from it. And it probably would have helped us, qualify for a house even more. But
Right.
instead, I had to sell the townhouse because there's only so much you can rent it for compared to what your mortgage payment is. And then I had an
Mhm.
HOA payment. So to me, it was more like a liability than an asset. But I think, like me being in the real estate game, I just learned a lot of stuff, not because I came in knowing all this stuff, but honestly, just by working with people like you,
Mhm.
just helping clients. And when they have a need, right, they ask you questions. Everyone's situation is different. So every person I work with is a learning opportunity.
Mhm.
So I'm not the most knowledgeable person in the market, but I've learned a lot, in almost 7 years I've been doing it.
Right.
I want to say I feel like we got into a place where price values it's actually cheaper probably to rent than to own.
Mhm.
Historically, it's always actually been the opposite. It was
Right.
always more beneficial to own than to rent. If you look at it, and I don't knock being, renting, right? I was renting, it's just at the end of the day, if you're somewhere for 5 years and you've been paying rent every month and you decide to move to another city, like, what do you have to show for it?
Yeah, nothing.
And also, people are in different places in their life, right? So maybe renting is more convenient or maybe more useful at the time. But I think ownership for sure is like it's a pillar, it's a keystone. So I think so with the townhouse I lived in, I didn't really have much maintenance. I think I had like a little backyard and I planted some flowers and
Mhm.
whatever. But that's kind of like most of the time that's what your HOA covers is like
Right.
common gardening and landscaping. When I owned the house, yes, I had more financial responsibility. Like when I wanted to paint the house, it came out of my pocket. When I wanted to redo my driveway, when I wanted
Mhm.
to put in a sprinkler. So, but that's not stuff you got to do all the time. Now, if you
Right.
buy a house that needs some work, that's kind of like the trade-off. Like you might get it for cheaper, but you're gonna have to put some sweat equity into it. But if you buy
Mhm.
a turnkey home, you don't have to worry about anything, but you're paying a higher price for it. So you have to kind of like figure out, do you want a fixer upper, you want something that's, turnkey, or you want to be right in the middle. So it just depends on, your lifestyle, really.
When it comes to I've seen this happen just from afar with
Mm,
friends and stuff. So when we talk about generational wealth, and like you said, it's, passing that on. Um, can you speak a little bit about how important it is to make sure that you dictate how that's going to go? I've seen people when their loved one passes on, the house is kind of in limbo because now everybody wants it
yeah,
because there's not a will. So, and I think a lot of times, especially, when you're younger and you buy that house, you don't
mhm,
really think about it. Is it important to make sure that you map that out as
yeah.
soon as you become a homeowner?
So again, I'm gonna come from my own point of experience. So when I bought twice,
Mhm.
I never had a trust. I only did my trust just last year. I'm 39, so I did it when I was 38. And something just kind of kept tugging at me. It was like, hey, do this trust. You got, a couple of little different financial investments and little bit of small stock portfolio and a couple of
Mhm.
rental properties and stuff. And something told me I was like, I did the right thing when I was 30. I got life insurance. I think in our, in the black community, that's a few of the things that we don't really follow up on is life insurance and trust and
Mhm.
wills. So yeah, I've seen plenty. That's what it was. After I think my third probate, which basically is a house that has to be controlled by the court because
Mhm.
no one's in control of it. There was no will, no trust. After I did my third one, something told me to get my trust done. So I finally got it done. And I try to tell people now, it's just get a trust or just a will at least. Because with a will, you still have to go through the probate court.
Oh, you will?
Yeah.
Oh, I didn't know
Only a
that.
trust will put everything in set in stone.
Oh, I didn't know that.
Yeah. So you want a will,
Mhm.
it's called a pour over will and a living trust. Now, you want to do, most people want to, I think it's called an irrevocable trust where you can go back and make changes. A revocable trust is like set, can't make
Mm.
any changes.
Mhm.
And then once you do the trust, you have to set an executor. So if if I died and you were like my son or daughter, and I could say, all right, I want you to be in charge of my estate, and then you can make all the decisions based off what's in the trust.
Mhm.
So there's no ifs, ands, or buts about anything.
A lot of my friends started buying in like their 20s,
Okay.
you know what I mean? And I was pursuing music and acting and
Yeah.
modeling. I didn't have time to do the whole
It wasn't your
domestic. It
focus.
wasn't my
Yeah.
focus. And now they're, some of them are on like their third home and they've got, rental property. So I feel like I'm really behind the 8 ball. So is it better to buy young?
Again, I'm gonna just come from personal experience. I think um, marriage creates a good opportunity to buy
Mhm.
because when you come together and you making dual income and also the tax advantages that come with being married, it gives you an opportunity to buy. It makes you stronger. And I'm not saying you have to be married, but that's how I got my start was by being
Mhm.
married. I think I made like $4,000 from our wedding. So I took that money and I used it towards my closing costs.
Yeah.
Um, Another method that actually helped me get my first rental property was my 401k.
Mhm.
So if you're on a job, max that 401k out as much as possible. Take advantage of the company match if they have one, because you can always tap into that money. a lot of times these plans, these 401k plans allow you to take out withdrawals towards home purchases, or at least allow you to take out a loan,
Mm-hmm.
which all you're doing is you're paying yourself back with interest.
Mm-hmm.
There's this really cool concept. It's called rent investing. So let's say you're like, oh, I can't afford to buy in Long Beach, but you can buy in Detroit, Michigan. Stay where you're at if you're renting, but if your income allows you to, go buy a piece of property in Detroit
Mm.
and have a rental property, because what it's doing is giving you a tax benefit. It's allowing you to get owning real estate, especially investment property, gives you tax advantages. So not only are you giving yourself a tax advantage, but you're also creating a passive income.
Mm-hmm.
If you're financing it, you're probably gonna make a little bit of money, but if you're paying cash, your return on investment is 100% every month,
Mm.
and then you get to write off any of the maintenance costs and stuff. So establishing your credit.
Yep.
So just when you're young as possible, just try to focus on establishing your credit. Try to be diverse in different lines of credit. And the biggest thing is you always want to have the biggest pool of credit possible, right? So like if you have a couple credit cards, always try to get them increased so you have access to credit.
Mm.
And if you're not utilizing it all, that's a good thing. But try to utilize some of it. But it's better to have $20,000 of credit access than not have any.
So that's a good point because I have credit cards, obviously, but I always like pay, and I've never asked for a credit
You
increase. Is that
should.
something I should ask
You
for?
should, because
Okay.
it factors really heavily on your what's called credit utilization.
Mm-hmm.
So if you're trying to get approved for something, if a lender says, okay, she has 3 credit cards, but she only has $10,000 of credit,
Right.
and if you're utilizing, maybe 50% of it or none of it, right? They're like, all right, she only has 10,000, but if you have 20, 30, 40,000, and you're not using all of it, or if you are using some of it, that actually helps you
Mm.
because they say, okay, she has access to all this credit and she's been responsible, she's made her payments, and it's always good to have access to capital.
What about somebody who's older, like say 50s and up?
So that's actually a really close topic to my heart
Okay.
because of my dad. So me and my dad grew up in apartments all our life, and I bought my first house when I was 27. My dad 2 years ago bought his first house
Oh, okay.
at 66. And really, the way he did it was I'm gonna touch on these first, and then I'm gonna lead into why the opportunity came about. So, if you're older and you never like own, highly suggest that you look into streams of income. That could be Social Security income. It could
Mm-hmm.
be disability. It could be any pensions that you have or retirement accounts. That's going to create the opportunity for you to purchase. Also consider buying in 55-year-old communities.
Mm-hmm.
A lot of times, the purchase prices are cheaper. Like we have one here nearby called Leisure World in Seal Beach. They're essentially like small condos. They're cheap. They're like 200 some thousand, but you have to pay cash for them.
Mm.
But you figure if you have a retirement account, you have access to cash. You could probably take out that money and pay it off.
Mm-hmm.
And I think they have a small HOA fee. And also living in those communities, you don't have much maintenance. You probably have a HOA payment. Um, uh, People combine 55-year-old mobile home communities.
Mm-hmm.
But here's the thing. So my dad like went through bouts of like homelessness,
Mm.
even when he was living out here in Long Beach. And the way he really got himself on track, he applied for disability with the VA because he was a veteran, and he ended up getting disability, and it changed his life.
Mm.
And a lot of people may look down on disability, like, oh, people are using the system, or you don't really need it. But for him, and I'm sure this could be the case with a lot of other veterans, especially here in Long Beach, out on the street, the reason why it changed his life is because it gave him stability. And then what it did was because he was a veteran, he ended up getting a job in the VA system.
Mm.
So now he had a steady check because he always had the education. Then he bought his first home in Las Vegas 2 years ago.
So
So
good.
he found gainful employment. He still gets his disability, and he's working. And he's been working, like 5, 6 years now.
Mm-hmm.
So you never know until you try. That's if you're trying to do it on your own, right? But here's a couple of different methods you can do if you're older. This multi-generational living has become kind of big, more so
Mm-hmm.
because home values have gotten expensive. So if you have like a grandmother and a grandfather, you can combine your like incomes and your credit, and you can buy a multi-generational home. And that way, everybody's kind of bringing something to the table instead of, just a few people trying to do it on their own. Now you're able to come together and make it happen, and it's much better than renting.
Right.
So, and then you have something to leave to the family. If your grandparents pass away, now they can leave a house to their kids.
Right.
And nowadays they actually build houses that are multi-generational, like houses within houses. You'll see them a lot, like out in Riverside County. The other thing is multifamily. If you all want your space, go buy a duplex. You come together for the down payment, qualify for the loan together. Your parents can live downstairs. Your family can live upstairs, and nobody's renting. You have an asset. So that's another method an older person could do, is buy a duplex with their kids or whatever. So that's just kind of like just little strategies in a nutshell.
That's great. Thank you so much. I've learned so much. It's great. It's been a long time since I've done a podcast and I learned so much. This is good. This is good.
Yeah.
It's going to make me rethink some things just personally for me, because I've wanted to buy property out of state. I think the property management side of me, since that's what I did part-time for so long, just was like, no, because of the maintenance. But in my journey with that, I have found like little boutique property management companies that'll just charge you a small fee, and then they'll,
I stopped paying out. Well, I used to have a property manager for like 5 years, and I stopped using them. More so because I started gaining the soft skills I needed as a realtor. So I think I've been managing my own properties for like 2 years now.
Yeah, all you really need is a Rolodex,
Yeah,
of people that you can call and say, hey, go fix this,
That's it.
So yeah,
And you just have to be able to have the tolerance at taking calls every once in a while and having some patience.
Yep, that's it. That's it.
Yeah.
Not a lot of us have that these days, though. But yeah, that's really, really it. Thank you so much for sharing. I think this has been very informative on both fronts on how home ownership can help you build generational wealth. Honestly, what I've gotten from this is how it can help you build stability, not only individually, but your family, your future. So I think it's changed my perspective on some things. Thank you again, Angelo. This is great.
You're welcome.
All right, you guys. So now I hope you're inspired like I am. I'm actually going to go get on Zillow. Me and Zillow have a great relationship. They send me stuff. They be like, you ready? I'm like, ooh, not yet. But now I feel like I can get a little bit more prepared, and have actually more confidence. I think I've taken steps financially to make sure I'm okay, so I think I'm prepared.
Yeah.
I think this conversation has given me some confidence, though. So
you just need that seed planted.
Exactly.
Once you keep watering it, it'll finally blossom.
Yeah, exactly.
Yeah.
So, all right. Thank you guys so much for joining us. Make sure you take the steps that you need, especially if home ownership is something that you want to do, which I think all of us probably want to in some way. Go check out his portfolio on LinkedIn. It will inspire you. Once again, I'm Jackie Ray. And remember, if you have to speak a word, make it a good one. We'll see you next time.
Okay, let's go.